G'day, crypto crew. Imagine this. You are a Schrodinger's cat, but instead of a box, you're in a quantum superposition of bull market euphoria and bearish dread, alive with Australian $187,000 dreams one moment and collapsing into $147,000 reality the next. That's Bitcoin right now, folks. And that's where we kick off today's daily update. I'm Sash, your unapologetic Bitcoin believer. And if there's one thing I know, it's that this tech isn't just a code. It's the quantum entanglement of finance, freedom, and the future. I've been riding these waves since the early days, watching Bitcoin evolve from cypherpunk whisper to global powerhouse. And let me tell you, in a world of fiat flatlines, crypto is the spark that reignites the human spirit of innovation. It empowers the underbanked in Melbourne's suburbs, fuels remittances for Aussie expats down under, and challenges the old guard to evolve or evaporate. Today, we're dissecting the dip, celebrating local wins, and arming you with the insights to thrive. Grab your ledger, settle in. This is going to be a deep dive into why I still bet my future on this revolution. What's got you excited or spooked today? Hit the comments. Let's entangle our thoughts. All right. Before we hodl our way into the heavy stuff, let's lighten the ledger with today's crypto chuckle, fresh from the blockchain bakery. Why is Bitcoin like a bad boyfriend during a market dip? It promises the moon, but always leaves you hanging in uncertainty. But doom. Okay. Grain-worthy? Blame the volatility. Even my jokes are rebounding. But seriously, if that didn't tickle your private key, drop your best crypto pun below. Last week's winner gets a shout out tomorrow. Laughter's the ultimate fiat hedge. Keeps us sane in this volatile vortex. Let's start close to home, because nothing fires me up like seeing Australia's crypto scene flex its muscles. Down under, we're not just spectators, we are builders, innovators, and now with BlackRock's bombshell, we are stepping into the big leagues. Picture this. BlackRock Australia is launching its iShares Bitcoin ETF, also known as IBIT, on the ASX this mid-November. That's right, folks. The world's largest asset manager is bringing spot Bitcoin exposure to everyday advisors without the hassle of direct custody. Management fee? A tidy 0.39% per annum, cheaper than a flat white in the CBD. Tomorrow's stats from BlackRock nailed it. This is about efficient access to Bitcoin as a portfolio diversifier. For Melbournians and Sydney siders, this means your super fund could soon dip into BTC without the wild west vibes of unregulated exchanges. Imagine institutional money flooding in, stabilizing prices, and making crypto as Aussie as Barbie on the beach. But wait, there's more local gold. Block Earner just won a regulatory showdown, paving the way for Australia's first Bitcoin-backed home loans. Yeah, you heard that right. Use your BTC as collateral for that dream pad in the Dandenongs or a beach shack in Byron. No liquidation nightmares if you play smart. It's a game changer for wealth preservation in a housing market that's more inflated than a hot air balloon. And If you're in Melbourne, keep an eye on our tech hubs. Innovations like renewable powered mining pilots are popping up, blending green energy with hash power to keep Australia ahead of the curve. Now, regulatory ripples. ASIC's been tightening the noose on scams, with fresh warnings on crypto ATMs linked to money laundering. Smart move protects the newbies while letting legit players like Gemini's shiny new Australian sub thrive. Market trends. Bitcoin's dipped below 147,000 Australian dollars, but local traders are eyeing it as a buy the dip bonanza, especially with ASX sentiment turning cautious amid Wall Street wobbles. Technological front. Aussie devs are leading in blockchain for supply chains. Think tracking other experts from Queensland with immutable ledgers. How's this shaping our landscape? It's democratizing finance, mate. No more gatekept by banks. Everyday Aussies can now hedge against inflation with BTC while funding the next wave of startups. What do you reckon? Will BlackRock's ETF spark a local bull run? Share your Melbourne market takes below. And for the full scoop, swing by cryptologic.com.au. We've got exclusive breakdowns on these home loans and ETF trackers. Your one-stop for Aussie crypto intel. Zooming out to the globe, because crypto doesn't respect borders, and neither should our radar. Bitcoin's been on a tear downward. From that euphoric $187,000 Australian peak last month, it's created 20% plus to a 6-month low of 146,704 as of Friday, settling around 147,743 today. Blame the risk-off mood gripping markets. Tech sell-offs on Wall Street spilling into crypto, with Ether flat at $4,858 after a 10-day low. Long-term holders dumped a record 815,000 BTC in the last 30 days. Per Crypto Quaint, that's Australian $69 billion in whale exodus fueling the fire. Is 2025 the new 2022 bear? Nah, say optimists like Jeff Kendrick at Standard Chartered. BTC could hit Australian $268,000 to $383,000 by year end if momentum holds. Strategic partnerships still in the show. Harvard's endowment just quadrupled down on BlackRock's IBIT with an Australian $678 million stake. That's 20% of their US equities. That's Ivy League validation, signaling BTC as treasury royalty. Meanwhile, China's stirring the pot. Accusations of US Bitcoin theft via their virus center, while new guidelines greenlight renewable mining in pilot zones, 80% clean energy required. Tech advancements. Ethereum's Fusaka hard fork early November slashed fees and boosted scalability. ETH holding Australian 4590 plus amid the chaos. Solana's down 12% to Australian 217, but XRP's ETF launch racked Australian $89 million volume day one, topping 2025 debuts. Market movements. Fear and greed index in fear at 40, but daily mine BTC now outpacing ETF buys, a yellow flag per analysts. Trumpos, crypto promises delivered lighter regs, boosting sentiment, though his Trump meme coins a wild card. Globally, these dips are reset. AI hype still in spotlight, but crypto's catalysts like El Salvador's BTC embedded IDs keep the fire lit. How's this rippling back to Oz? Cheaper global BTC means better entry for locals. Thoughts on the whale dump? Spill in the comments. Are we buying or bracing? Time to roll up sleeves. What's really cooking under the hood? This BTC plunge isn't random. It's a perfect storm of macro headwinds and micro shifts. First, the bear case. Dave Rosenberg calls it official bear market terrain, down 20% in a month, with a dead cross looming on charts. Wales offloaded 69 billion Australian dollars per Bloomberg as Fed rate cut hopes fade. December's looking dicey. Crimping risk assets. For Australia, this ties into ASX jitters, banks dipping, miners volatile, and that 2026 market trap. ASX traders are whispering about over-leveraged position unwinding. Globally, AI is sucking oxygen from crypto narratives, thinning catalysts post-halving. But flip the script, I'm bullish because history rhymes. Post-2024 halving, BTC subdued volatility, staying above 153,000 for ages. Scream maturation, not meltdown. Institutional bets like Harvard's, that's trillions of Australian dollars inbound via ETFs. BlackRock's global IBIT inflows could compress spreads, lifting liquidity. In Oz, BTC-backed loans could unlock Australian dollars be in real estate crypto, blending TradFi with DeFi. Tech-wise, Fusaka's efficiency plays mean ETH could spread ahead, alt recovery, dragging BTC up. Predictions models? Australian $175,000 by November, and if ETF flows rebound, or Australian 122,000 floor if not. Implications? Local markets stabilise with ETF access, globally regs like EU's MICA foster trust. My take? This dips your quantum buying. Scarcity post, halving plus adoption equals moonshot. But hedge with stables, folks. What's your risk radar saying? Debate in the comments. Education is my jam because knowledge is the ultimate airdrop. Let's unpack Bitcoin's core, the halving. Every 4 years or so, next in 2028, mining rewards slash in half from 6.25 to 3.125 BTC per block. Why? Scarcity. With 21 million cap, it's digital gold. Post-2024 halving, we've seen muted volatility but steady climbs. BTC is up 90% year to date despite dips. How to arrive? Miners solve puzzles, proof of work for new BTC. Halving slows issuance, boosting value if demand holds. Investment tips. A little disclaimer, not advice, consult pros. DCA, dollar cost averaging into dips. Buy fixed AUD weekly to average costs. Stake ETH for yields, post-Fusaka around 4 to 6% APY, but watch gas. Consumer protection, use hardware wallets, Ledger or Trezor. Enable 2FA and verify URLs. Scam nabbed millions via fake ATMs. Spot red flags. Unsolicited DMs, guaranteed 100x promises. In Oz, ASIC's your shield. Report via their site. Passion plug. Bitcoin's my revolution because it hands power back. No more banks, no more borders. It's transformed remittances for Filipino communities in Melbourne, cut fees for global trade. Believe in it? Stack accordingly. Don't stop here. Knowledge compounds like interest. Some freebies for you. Coursera's Bitcoin and cryptocurrency technologies by Princeton. Audit mode, 11 hours, covers blockchain basics. EDX's FinTech Future Commerce from HKU, free, dives into DeFi. Some workshops, Blockchain Australia's virtual series, next November 25, regs focus sign up for free. For hands-on, Gemini's Learn and earn dollars via quizzes. In Melbourne, meetups.com, Crypto Down Under Group, monthly in person. For more info and news, head to cryptologic.com.au, curated for Aussies with local twists. Let's wrap up, guys. For unfiltered Aussie angles on this dip, BlackRock ETF and more, cryptologic.com.au is your portal. Fresh articles, toolkit, community forums, dive in today. Final vibe? This quantum chaos. It's the prelude to liftoff. Bitcoin is not just surviving, it's thriving, reshaping finance from Melbourne to Manhattan. Thanks for riding with me. You are the heart of this community. Like if you're buying the dip, subscribe for more fresh take, share with a skeptic mate. What's one takeaway? Comment now. Let's inspire the stack. See you in the blockchain. Cheers.